Welcome back, YouTube, and in this video I'm going to be breaking down order blocks and structure. Most traders think that they understand both of these concepts, but when it comes to the market they continue to lose. You need to stop looking at every single impulsive candlestick as an order block and instead zoom out and see the overall story of the market. Within this video I'm going to show you exactly how to read structure the way institutions actually build their positions. I'm going to show you how to identify the real order blocks that cause major moves and how to avoid the fake ones that liquidate retail traders every single day. By the end of this video, you're going to have a completely different perspective and view of the market and how it actually moves. This is a prime example of an order block on the lower time frame and looking at the higher time frame. The extreme high or the higher high breaks the extreme low to the left with an impulsive move. Now before I continue, I want to ask you, does this look like an A+ setup? Now moving on. As you can see, what we did was we swept previous highs, we took out the previous high forming a new higher high, and we form a new lower low breaking previous lower lows. And also this is on the higher time frame. So now you have a lot of accumulation and liquidity being built up before actually tapping into that higher order block. Now this looks like an A+ setup. This looks like something you would take over and over and over again. Now the thing is you might lose setups like this over and over and over again. Price taps into your zone, you enter the position, and then guess what? You lose. And you continue to question why you keep losing and why these order blocks and this strategy is not working for you no matter what you do within the market. No matter how many confluences that you actually use within the setup, you still tend to lose. Or the worst of them all, the dreaded thing that every trader hates. The market takes out your stop loss, then moves in the direction that you wanted to go into. Now, without further ado, I'm going to show you exactly why this keeps happening to you. First things first, what you want to do is look at the daily time frame and the higher time frame perspective of the market. This is going to show you exactly what you're looking to target and where price needs to truly move towards. Now, jumping to the 4 hour, what we want to see is breaks of extreme highs sitting to the left, which would be right there. Now, all we want to do is mark out that low and go all the way up to the high that was formed. And as you can see, we've reached the 50% of this general move, being this move sitting right here. Now, once we come back into that 50% of the move, this is our premium discounted level and we can look for buys from this area. With that being said, a lot of traders are going to try to short around this area of high right here because it broke these lows to the left, right? But all we're doing is we're taking out these lows, tapping into the discounted level, which would be the 50% of this general move right here, then continuing to these highs. So it's not that the strategy doesn't work, it's just that you simply don't understand true market structure. As you can see, what we do is take out the stop loss. And you question yourself, you question the strategy, you question order blocks, you question market structure, you question everything that you've ever learned, and you want to give up. So now once you form this new structural leg right here, you're going to do the same thing. The low all the way to the high, you're going to want to target the 50% of the move because this is our extreme premium discounted level. So we come down into this area, we tap it, then we continue up. It's as simple as that. So we're going to mark out our low again, and this is our new high sitting up here because this is a high that pushed past this previous supply and these highs sitting to the left. So we do it again, this extreme low that broke previous extreme highs to the left that formed this new high, and we wait for price to come back into this area. We also come in and fill this FVG right here in this gap. Gaps will always get filled because it's inefficiency within the market. Now with that being said, this is our order block. This is our demand because we have imbalance. We broke previous structural highs forming the new higher high. This is within the premium discounted zone, and we continue to run the highs. Now, this is where traders get trapped. They see this supply right here on the hourly looks great. Like I said, we took out extreme highs, we dropped down taking out extreme lows, right? You're like, wow, okay, this is a beautiful setup. Even on the 15-minute, we have the same exact thing. We have the protected high, we have this right here being our order block, and we have the impulsive move to the downside. Price accumulates, price builds up liquidity. We understand that price needs to come back up to take out this liquidity area sitting right here, to then tap into this order block sitting above, to then push back down. But if we play this out, what we can see is price runs through the supply right here. I'm going to show you exactly why it does that. Now if we go back to the 4 hour and hourly, what we can see is this extreme order block right here. We tapped into it, we tapped into the imbalance in the premium discounted zone, everything lines up. Now our next target are these extreme highs right here because that is the last high of this general move. This is our impulsive move, this is our order block, this is our liquidity point, this is our entry sitting right here. And all we do is we target this high. So with that being said, the traders that are trying to short within this area of order block and supply right here get stopped out because that is our TP level. Instead of looking at short-term moves, we need to move with the story of the market. So to break down this loss, we take our fib tool right here, we get the premium discounted range of this low and this high that broke previous highs sitting right here. And we have this order block sitting right here because this is the order block that pushed price up impulsively, and it's sitting within the premium discounted level. And not only that, we're moving with the overall bias and perspective of the market, which is bullish. And of course, we have tons of liquidity and highs sitting above. So now once we tap into this extreme zone right here, we go down to the lower time frame to get our entry, which would be sitting right here. This order block and this low push previous structural highs. So if we use the fib tool again, from the low to the high, the premium discounted range, there it is. Now we want to trade underneath these lows right here because these have yet to mitigate this gap and this order block that pushed price up. So now price comes down at market open. This is our entry. Stops can be at the extreme low of this move to protect yourself, and TP can be at this area of liquidity, or you can target this extreme high sitting above. We'll play this out. As you can see, we start to move to the upside, and again, you could drop down to the lower time frame like the 5 or the 1 minute, and you can do the same exact thing. The extreme low to the extreme high, get the premium discounted range. Once you get that, you can find your area of interest that you want. So on the 1 minute, again, more confirmation going from the hourly to the 15 to the 5 to the 1. You get your entry sitting right here. Again, stops at the extreme low, and then TP at the extreme high, the move sitting above. We'll play this out. We can see what happens. As you can see, price moves very nicely away from the zone because we're trading with the overall bias and perspective of the market. We're trading with the true story of price action. And now you keep doing the same thing. You mark out this order block right here that pushed price past the previous highs. What you can do again is you can drag your Fibonacci tool to get the premium discounted zone from the low to the high. We can keep extending it to see what happens, just to see what price will do when it comes back to this area. There you go. So it comes back to the premium discounted zone. It comes back to this order block sitting right here that pushed price up past these previous highs. It takes out all this liquidity sitting right here because these lows have yet to mitigate this order block and this imbalance to then retarget the extreme highs that people are going to get stopped out on because we're moving with the overall bias. That's the 15 minute. The 5 minute again, you take out the lows, you form the extreme low. You take out the highs, forming extreme high. You pull the fib, you look at the premium discounted zone. Again, it touches a premium discounted zone, then you continue up. It's something as simple as this that can change your trading drastically. So ladies and gentlemen, that was the entirety of this video. I hope you all enjoyed this. If you did, leave a like, comment, subscribe, send this to a friend that might need to see this. If you guys are looking to take your trading to the next level, click the link in the description below. What you'll find is a one-on-one mentorship and also the RROP Discord and Academy. We'll see you guys in the next video.